Thanks for tuning in to Alex Crypto TV. I'm your host, Alex Crypto. Check out my website, alexcrypto.com, or hit me up on Twitter at AlexCryptoTV, or on Gabby actually at AlexCrypto. Anyways, let's jump right into it. Let's check out CoinMarketCap.com. Market cap stands at $284 billion, which is terrible. Yeah, definitely not great. The volume is also not great. The BTC dominance though has improved. Let's take a look at the charts. I did notice something interesting that I wanted to share with you guys. Anyways, here we go. Let's take a look at the Bitcoin to US dollar for Coinbase on the hourly chart. Now, there was something very interesting I noticed. Now, if you take into consideration the fact that most of the trading is done by computer algos these days and not human beings, you then would have to consider the fact that these algos must be operating by some sort of a rule. You know, there should be a rule where they buy and where they sell, and some sort of metrics or some sort of points where, they should trigger reversals or the algorithm to do something basically. So I started looking for some sort of a pattern, trying to figure out what the hell are these algos doing and can I ride the wave with them. I did start noticing something interesting here on the hourly. Every time there seems to be, and this only works on the way down for some reason, it doesn't apply the same way on the way up. Perhaps the algos use a different technique when they're going on the wave up. Anyways, so let's see here. For example, we have an impulse wave up here. We take a fib from the zero down to the peak of the wave here, and we see this black line here. See this black arrow? We go straight to the one, and then we retrace from the one down to the 236. We take a bounce to the 0.5 or an area between the 0.5 and the 0.618 Fibonacci. So as soon as we hit that point, the algos switch downward and we get a movement down like so. Boom. And then the same thing starts to repeat itself. So let's take a look at this one, for example. This was that bull trap where everybody thought, oh, Bitcoin, we broke out of our little downward bear trending channel. We're all good. We're in the clear now. It wasn't the crash. Wrong. Anyways, let's take a look at that one. So again, we have an arrow, impulse wave up. We hit the peak, we come back down, retrace to 0.236 Fibonacci, take a small bump up to the 0.5. Again, sell zone, boom boom, calzone, same thing, right? And again, it takes a crap, and we go sliding way back down again, all the way down here. Okay, so moving on. Another impulse wave up, right? Then we retrace down to the 0.236 Fibonacci, take a bounce between the 0.5 and the 0.618, and then we retrace back down, take a crap again. This thing keeps repeating itself. I'm not even kidding you guys. Look at this. Look at this on every time scale. Look, an even bigger time scale. See, look at this fib. Look at this fib. From here, which is the trough, to the top of the peak, we go from the 0 to the 1, and guess where it retraces down to? 236. This is where we are now. This is where Bitcoin is at the moment. And curiously, on the hourly chart, about 2 hours ago, we took a bounce at exactly that point. Wow, isn't that curious? All right, so I think you're starting to get the point. Let's zoom out to the 3-hour time frame. And let's take a look at the wider time frame. I want to show you guys something on an even bigger time scale. So here's a really big fib trend line, or fib level line rather. So we go from the 0 to the 1, retrace down to the 236 Fibonacci right here, bounce up to the half or the 0.5 right here, and then down we go into that other smaller pattern, by the way. Boom, boom, boom. Interesting. Now let's look at Bitcoin completely, the daily chart on the biggest time scale there is, the complete time scale. Let's see what we see here. We see the three base levels of support. What else do we see? Huh, isn't that curious? If we draw Fibonacci lines from the bottom of the Bitcoin graph to the very top to $20,000, look at that. We go from the 0 to the 1 and we retrace back down to the 236. Although that retracement is not yet complete, but look at that, isn't that curious? We've bounced off the 236 Fibonacci on a midterm time frame. It's taking a bounce up to the 0.5. Be curious to see if after reaching about 88.50, it'll slide back down to 52.31. So that'd be very interesting to see. That's a very interesting pattern I've been noticing. But the good news here is, even if it still has a little further down to go, you can make a play here, play the bounce from the 236 from 7200 up to 8800. You could play that bounce, and then play a short position down to 52.31. And the good news is this retracement slash correction slash market crash looks like it may be finally over. Personally, I believe that at that level, 0.236, is when the algos will switch to buying again, and we'll recover out of this mode. So guys, let me know what you think in the comments. I'd like to know your thoughts on this. Yeah, I didn't really go into the Elliott wave analysis or anything else. This is just something that I've noticed in terms of the Fibonacci levels. So let me know what you think in the comments below. I'm Alex Crypto. Check out alexcrypto.com. Tune in next time.